Traders, welcome to another Trade Your Way session. This is a very quick update. We're going to be covering pound dollar first, then the pound yen, then the Aussie dollar and gold. And perhaps even, if we have time, have a look at the US stock market as well. So let's start with the pound dollar, also known as cable. Let's have a look at it on a daily time frame. Very quickly, because I wanted to highlight this 127 extension that's been holding really well. So if you recall, the first week of January we shorted with divergence that we had here on our awesome indicator, the settings for which are 5 and 34. This is my pro storyteller, so it's slightly different, but it does give the same readings pretty much. We are gauging the volume. Note that this kind of volume indicator you can also have propped up vertically on the side of your charts, either here or here, which you sometimes do see. Anyway, getting back to this, we've tested this resistance and it's holding really well. And then we had the sharp sell-off on Friday, so we are looking for further downside. If I show you the weekly very quickly, what we see when we zoom in on the pound dollar is the 76.4 doing its job, and the 764 strategy is in play and is working really well at the moment. And so there have been numerous opportunities presented to us on the pound dollar over the last 2 weeks, which I believe some of you have really capitalized on. Myself have had a good run with it so far. There's also divergence as well on the weekly, so you can see it's two-wave divergence. So we've had our first wave up, then we've come back, and our second wave here, the volume is less, it's lower, despite the fact that we have been pushing higher here, making new highs, breaking 137. I think we got up to about 137.10, and then we dropped. Note the 76.4 is at 136.77. So testing, large wick rejection. We had a bearish candle, but it was saying don't discount or dismiss the bullish move just yet. That's why it remained green, to discourage us from jumping in and start shorting it. And we were right to pay attention and note this on the weekly, because as you can see, it did actually go up and make another U-turn on Thursday into Friday to actually make a new high at 137.10. So it's tested it 3 times on a weekly, 3 weeks in a row, and third time's rejected. So I wouldn't be surprised if we do see a bit of a sell-off and a bit of a sharp move down. But as you know, with the pound dollar, it can be a bit of a fickle pair, and so it can do, as you see here, test 3 times, retest, before actually seeing the 4th week maybe going up and pushing higher. It's a doji candle on the weekly, but it is a green bullish doji candle nonetheless. So we will wait patiently for tomorrow to open, Monday. It is Martin Luther King Day. It's a public holiday in the US, so volume may well be less tomorrow. So maybe Monday stroke into Tuesday we will see a move or have clarity as to what the pound's intentions actually are. Note that if we do have a bit of a sell-off further downside, what we need to do is look for downside targets. So I will give you them in a minute. But first, upside potential, if it does break this key resistance area. So as you can see, it's key resistance, then it has room to stretch its legs to the upside. And 140 round number, big psychological number, will be its first decent target, which is about a good 300 pips from the 137 if it can break it. So, you know, plenty of time to get in on that and plenty of time to go long if it decides to be bullish. People will ask me all the time, when is it bullish? And I'll say it's bullish when it's bullish and it's bearish when it's bearish. So be patient, sit on your hands if you're not clear, keep looking at the higher time frames, and then drill down to the smaller time frames. So let's drill down to the 4-hour time frame. So the 4-hour time frame, we have the downside trend like a flag formation. We have been down with our divergent strategy, which took us down to 134.80 area, which was our first decent major target with our divergent strategy. Once it done that, then I was no longer looking for further downside, or at least wanted to wait to see what it would do. And that, sure enough, we did go up, retest. So we've got the 3 times testing this 137 before it's rejected. Then I had a trend line just to see if it would break that. And we had our 8-period moving average as well on the 4-hour. And you can see it's just gone below, tucked in, and we've started to see some a bit of divergence as well on this double top on the 4 hour. So sure enough, everything's telling us that it was going to be a bullish move down to 136 area. If you look left on this chart now, you can see a little bit clearer that there is some structural support. So we've come down to previous structure. So we'll see what happens with the pound next. But if we can get a bit of a bounce up, I'd like to see a retracement before perhaps in another leg down to maybe test the previous low, or at least come down to test this trend line here, which will provide a good bit of support and prop it up. So to see this price action and to see this bit of action here, what we would do is we would want to drill down to our 1 hour, and that just gives us a little bit more of clarity and higher definition, if you like. Also, we had divergence on the 1 hour, so all the time frames from weekly to 1 hour is telling us divergence to allow us to short. So that was very powerful and very helpful for us to get short on pound. So where are we at now? Well, pound likes a 50 number, and it's sitting at 135.81, which is the 50%. We've just tucked in above that, and we're just sitting and waiting. So perhaps we're going to have a bit of a move up. But if not, first downside target I'll be looking at is back down to the low 135 area, 135.12 potentially. So 135.12 to the downside. That's our downside first major target, which is about 70 or so pips away. What's it going to do first? Well, let's see what sort of move it has, or what sort of move it presents to us first. So will it actually go and give us some sort of a punch to the upside? This is what it would. This is what we're looking for. Something like this, where let's put some fibs on this one, and let's make sure that these are on there. Yeah, so that's on there, and that's there. Okay, so yeah, there, 61. Okay, that's that. 76, 136.77 would be the upside of this range if it stays range bound. So another push up to the 136.70s would be an ideal play for another short, because it's really stretched up. The next level would be 61.8, so it could just stall around there, which is at 136.58. So we could get stuck around that 136.50 area. It likes a 50 number, so it could stall there before turning and going back down again. If it is going to be quite weak, quite bearish, let's look at a 50%. Where's the 50% line? 50% fib sits at around 136.40 area. So, anywhere up here really would be a perfect place for it to short back down from. So we could see that. It's gone down, made a move to the downside. Could be a liquidity grab to the downside before going all the way back up, or we could see another liquidity grab to the upside here before dropping. Let's just plot the 38.2 just to give us the last decent bit of resistance that I'm interested in, and that is placed at around 136.25. So I'll monitor this. I'll keep an eye on these levels. We want to see some sort of a move up here, and then we want to try and see if it's going to fall over, and then from there we could see a decent 100 pip move from, say, 136.20 area down to 135.10 or 12. That would be a decent 100 pip, another leg down. So we're going to keep an eye on that. This is on our watch list for the week, and that is my analysis for the pound dollar. Okay, let's now explore and analyse pound yen, also known as GEPI. So pound yen, we still have this head and shoulders in play because it hasn't taken out the head. It's still valid, and we're still looking for a potential drop. Again, this is pulled back. So are we going to have another leg up and continue to test the highs and make new highs? Or are we going to see a much deeper retracement? It's anyone's guess at the moment. It's all to play for. We just have to be patient, sit on our hands and wait and see. I don't have any clarity on this. All I can see is that it has the legs to perhaps give us a deeper retracement down, or potentially bounce off previous structure, which you can see here if we drill down a little bit further, and continue higher. Ideally, if a head and shoulders does start to play and this formation starts to play out in terms of seeing another daily sell-off, then I'm all for looking for further downside. Could even be quite a deeper retracement of like 400-500 pips. So yeah, we just need to be patient and just see what sort of a move we get. If we drill down to the 4 hour very quickly, you can see the previous structure, which when you look left, in case anyone's unclear what previous structure is all about, take these last highs. And you can see the way, you box it off. You can see 1, 2, 3. 3 previous highs, triple top, and then it broke it on the 4th attempt. So triple top, very strong support because of the triple top. So very strong support. And you can see prices stalled here as well at around 141. And so you wouldn't be surprised to see a move back up higher. So to look at that on a lower time frame, I think a 1 hour chart would more than suffice. And as you can see, I've already been looking at the extension levels because we played a divergent strategy on the 1 hour chart. The first attempts, I called it, went short here at 141.80 because pound yen likes the 80 number, down to the 30s because we know that pound yen likes the 30 number. It was a 50 pip move, was looking for a decent move, but pretty much as I placed it, I could see that volume was something was going to happen because we were fast approaching the US Open. And what did happen was it spiked up instead of spiking down and pretty much stopped us out straight away. So I didn't enter again, I just left it. I thought, okay, fine. But after several tests, here, again there, that test, and then again the next morning, so going into 10 o'clock when everything resets, 10 o'clock London time, everything resets between 10 and 11. That's when you notice the spreads really widen because everything is resetting, and that is around 10 to 11 p.m. London time, just so you can note that time. So that's about 5 o'clock to 6 o'clock New York time. So note that, that's when you sometimes see the spreads, well, that's when you do see spreads widen, and some people wonder why. And that's just when it's the end of day and Forex markets are resetting, the brokers are resetting, recalibrating, whatever you want to call it. Don't need to go into that now, but there you go. So there we had it. We had the sell-off, we had the move, we had the fib resistance at these extended levels. It worked perfectly. The strategy was still in play. I did say to my groups and did say in the various chat groups that providing 142.30 is not taken out up here, this divergent strategy is still valid. And so I know for a fact that some of you made money on this move down. I made a 1-to-1 trade. I put a 40 pip stop on as opposed to 25 on this one here. Still risked 0.5% as I did on this one, and basically got my money back with a bigger stop, bigger target. It was a 1-to-1 risk to reward. Simple as, really. 141.80 entry, 142.20 was the stop loss. I was willing to maybe toy with the stop had it gone back up there, but I just felt that after 3 or 4 attempts to the upside, I just thought if it's going to go and break this, you just think if it's going to break it, you know it's going to break it because it's tested it multiple times. And sure enough, it did its job, and it held, and it finally dropped, and we were straight into profit, and we didn't look back really, and it just did a nice little move down over several hours and just hit our target for a nice Friday trade to finish a very strong week. So yeah, where to now? Well, this is where we're looking at seeing where's it going to go next. So what we can do here, because this is where it becomes interesting, because a lot of people use fib levels and are not quite sure. They think you just plot it one time and away you go, but that's not the case at all. What you have to do is you have to say, okay, so we've identified one move, but now we want to focus on the move back up, don't we? Right? So you're going to say to yourself, right, well, okay, how do we do that? So there's no harm in placing fibs on this move. So you pick the highest point. So you can see, where's the highest point? There, isn't it? Use that, 142.26. Where's the lowest point? There. Okay, so you can focus on this move back up and see, just like we did with the pound dollar, a nice little retracement up here. Where's it going to go? Hit one of these levels. Could even go back up to test previous structure, which would be a nice 50% retracement around 141.50 to 60, and then drop from there. Now, if we want to see it drop, again, we can do the fibs in another way by simply saying that, okay, we've identified that. We can pull that now because we've identified that the potential for a retracement. We've got an idea where we'd look for it to go back up, maybe hit some of these EMAs. And then we can plot fibs again. And you're like, really? Again? I'm like, yeah, well, I want to see this last swing low. This last swing low to this last swing high. This is how we've plotted the fibs. And I'm interested in, well, what if it breaks this level? You know, what kind of a level is this that we're rested on? And then you can identify straight away it's a 61.8. Can you see that? If you can't, what we do is let's get rid of that and just clean it up, and you can see we've just come to rest around the 61.8. We trade in below the 200 exponential moving average on the 1 hour, and we're using it as resistance, but we've got some support. So maybe we could quite easily see a little stab down at the open Sunday night into Monday, gap down, stab down to around 140.80, because you know that it likes the 80 number, and that would be a good 100 pip move. So 100 pip move from 141.80 down to 140.80 could be the play. So we could get another little stretch down. If it gaps down and tests this area, I'll be interested to buy it back up. So if it does gap down at the open and we get further down here somewhere, let it finish off the move to the downside and then maybe start buying it all the way back up, because we have got a nice overextended price action on the indicators here on this volume, so it could find its way up. If it does gap up at the open, then I'd be interested in potentially shorting it back down again to 140.80. So we see what it does. I've got the levels marked up. We'll see how it goes. Target to the downside, targets to the upside. Just see how we play with pound yen. But of course, I'm going to follow pound pairs closely, and this is on my watch list as well, and I'll update you accordingly. Okay, our next pair, Aussie Dollar. The reason to share this is because on the weekly we have divergence. Clearly, we have a lot of divergence showing, and you can see prices struggled to go any higher. And this week we saw an inside candle on the weekly. It's a very bearish candle in itself. So yeah, I mean, you see this candle is just pulled up nicely. It's engulfing this one, and it's an inside candle, bearish, and it's just struggled. So we may see a little bit of a nudge up here, but maybe I expect it to break 7,700 and potentially give us another little nudge to the downside. A decent sell-off. I've kept the fibs fairly clean and fairly simple here, but just to highlight in a little bit more higher definition, if you like, I'm going to put my default. That was the default fibs. I'm going to put the fibs that I've customized on here just to show you a zone, an area where we broke up and broke out, and you know, we stretched up, and now we're just kind of floating up here. I just think that, you know, when you look left on the chart, previous structure is there as well. I just think that we could do with a decent drop back, and if that's going to be the case, if we do get that, then you see here when you look left, the supply and demand zone, or I think some guys refer to this, some traders out there talk about order blocks, in terms of where there's a liquidity grab, in terms of where price might go up to or down to, and then maybe orders getting filled. So you can see here, coming left on the chart, that we've got some, yeah, we've got like a supply zone here now. We have this double top as well, slightly higher. So I would have liked to see this get up to 8,100 again, which would give us another good 300 to 400 pip move to the upside. But just because of that weekly candle and the divergence, I just think we may run out of steam. Now, in terms of a pullback, I'm not sure we're going to get a decent sell-off, or I think first target would have to be back to previous structure where we broke out from. So that would be about 400 pips or so, 300 pips maybe, down to about 7,400. So let's explore that in a little bit more detail. Drill down to the daily. Just see this load up. Let's zoom in. Again, I've left the charts, left the fibs really clean and simple. We're bouncing off the 8 EMA, but you can see that I've got some fibs on it at the moment. I'm going to remove those, and I am going to focus on that specific bit of price action. So we take the last swing high, which is going back to the 1st of September 2020, and then we take that last bit of consolidating price action to the downside, the last major swing low, which is around 7,000. I've got 6,997 there, 6,991. There we go. That's the lowest point. So when we see that, you can see that it stalled at the 76.4 previous structure, but then it just kept going. It's kept going. We got some overextended signals here. Some divergence was starting to maybe form. We just kept going, and we've extended up nicely to some key fib extension areas. We've tried to break above, and then we've kind of come back down below, and it's kind of stalled a little bit, as you can see. So we're going sideways now. So you can see that on the daily, we're going sideways. It's tried to push up there. It looked really strong, and then the next following day, which was Thursday the 7th of January, we just stuttered, and Friday was a non-event with a doji candle, no volume, indecision. I think people suddenly thought, actually, I don't want to go long anymore. I want to take some profit on this bullish move on the Aussie dollar. And I guess if you started looking at the dollar index, you could see a bit of a relief rally, a bit of a bounce, which has started and been in play for the last few weeks. So that's tied in quite nicely with all the dollar-related pairs, so Aussie dollar, pound dollar, euro dollar, etc. So we've pulled back, gone up, clear signal to short this time, which makes a lot of sense because we've gone down, we've retraced up, perhaps maybe 61.8 or 76.4 of the last swing. We'll have a look at that in a little bit more detail on the 1 hour in a minute, but it's gone up here and just gone sideways, hasn't it? It's gone sideways, consolidated, really struggled to break, and then we finally dropped, have a double bottom. Now, this double bottom's sitting at this key fib extension and resting on the 8 period moving average. So, with this double bottom, could it launch itself up and see some fresh buying coming in? Now we've had a little bit of a correction. Sure, we could be all the way back up. If that's the case and it does go strong to the upside, then we'll just continue to look for upside potential. I've given you the target around 8,000, 8,100. Makes sense, right? Potential last previous swing high. But as price action's gone up, pulled back, retested and failed and dropped, I'd like to see it fail further. I'd like to see some of this, these green dots on my volume indicator actually turn red as well, and I'd like to see a bit more of a downside move. So let's explore that, because I'd say previous structures at 7,413, we have seen some divergence. We have had it here, but then there was a fresh bit of buying and volume came in, but that was short-lived. Very short-lived. It looked like, if anything, it was just a couple of days of liquidity grabbing, sucked in a few buyers at the very top of this range, and then it's exhausted, and it's consolidated, and it's turning. So Aussie dollar's interesting, because that will follow whatever the dollar is doing, dollar strength, dollar weakness, whatever that decides, we will be able to make some money off this dollar pair for definite. And 7413 would be an ideal target back down to previous structure, and that would use a bit of divergence to do that. Saying that, we could just stall at around 7,500, because that's a psychological number as well. So that's a 127. We could do that. So a couple of decent targets. It's still, for the Aussie dollar, that's quite a nice range. You know, still talking about 200 to 300 pips on a decent pullback, which, you know, over a period of a week, for example, if it took a week to play out, because the Aussie dollar's quite a placid mover, you're looking at about 70 pips or as an average true range ATR as a decent moving pair. You know, 70 pips or so a day, you know, 714.21, take it down to here. That's not bad. We'll see what happens. A good day would be 100 pips sell off. But anyway, that's the daily. Let's have a quick look at the 4 hour and then the 1 hour. So on the 4 hour, I've left some levels on there, pretty much what you've just seen. And so let's do away with them on here, because you've got them on a daily. Let's focus on this last major rally and just really focus on that. And you can see that 7,500 is the first fib to the downside, 7,503. So again, potential for a decent pullback, decent sell-off if it breaks this current structure. And just to put something on here, let's box this area and let's take it from previous structure there, and let's sort of just say like that, and say, okay, look, here is now resistance, broke resistance, came to test the resistance, now providing support. Technically, the Aussie dollar is a really nice mover. We've gone up, we've tried to retest the high, and we've failed, and then it's dropped. So double bottom, triple bottom area potentially. So key area of support. Break that. We've got open ground to cover to the downside. So that's a really nice chart. That's why I wanted to share that with you. Hope you find that of value. We will have this on our watch list as well, and we'll keep an eye on that over the week. Just want to show you on a 1 hour chart. All I've done is I've just highlighted this little bit of price action that we've currently seen, because I wanted to see that pullback that I just spoke to you about when we were on a daily. So we had the pullback, went up to near enough the 76.4, didn't quite tap out on there, dropped, but had another go. Proper bullish move. Really did suck in some buyers, and it was a really good move. I'm sure people made money on that bullish move, but it was short-lived, and it's just whittled away and wilted, and it's just you know, that's a nice move, and that's telling us that there is potential, you know, potential for this to drop lower. But again, remains to be seen. Let's wait for it to make its move before we decide to jump on anything. And that is Aussie dollar. Now we're going to move on to the to gold. Okay, I'm going to make this quite short, and we'll finish the video here on gold. So let's have a look at gold. Start with a weekly time frame, so everybody knows that not last week. Yeah, last week in fact. Last week we had that bearish move to the downside. We even had a signal rejecting off the trend line. So we went up and then we closed below. So we went up. It looked very promising. Double top. And then we failed. And so really, what are we looking for the downside? Well, at least a 76.4 of this last swing. It hasn't quite done that. It's come and tested previous structure. But I'd like to see it pull down a little bit lower before we start buying it. But, you know, that was what it looked like at the close of business on Friday. So, you know, it's anyone's guess what it's going to do next, because the volume is just sitting, in terms of momentum, we're just sat around that zero line. So anything can happen. We're just going to wait and see what it does next, because people are speculating, is it going to go up, is it going to go down? We just need to wait and see which way next. And yeah, so let's drill down and have a little look in a little bit more detail. So we're going to pull that's the weekly, just to show you, weekly target 1725. I've got 1725 as the weekly target, which could be the 38.2 area of this last massive range. I'll just show you that again. There you go, down to here. We have got a 50 EMA, weekly 50 EMA, which it bounced off perfectly in the first instance. So to come back down and test that area would be amazing, and that would take it down to around 1800. So let's see what it wants to do. Let's see if it presents a bit of clarity for us to maybe take a trade using the higher time frames. Let's drill down again to the daily. So daily 1837, been tested, sat on it. 200 EMA on the daily, been tested, using that as support as well. It's just trying to push through. It's like liquid, you know, your liquid that's seeping through the palm of your hands. It's just trying to seep through. You can't seem to plug it. The support is trying to hold it, but it's struggling. So that is potentially giving us a good indication that we're going to see a sharp move down, a decent nudge. The first target from an intraday point of view, I'll show you that on the 1 hour chart actually, it would be looking at this range, this last swing up, would be a 76.4 pullback, which I think is, if I'm right in saying, is going to be around 1810. So it's about 200 pips to the downside, which I can see gold can do that quite effortlessly. This is a 1 day time frame, so we'll see. So yeah, if it holds here and it starts going back up, then that's fine. We'll start grinding higher, and who knows, we might even get back up to 2000 on this next move. But right now, I'm just looking at it thinking this has got scope to at least go back down and retest the lows. Below 1810 and 1800, big round number here. We've got the 1763, which is the 50% of this range. So you can see that the way it bounced off it perfectly. Perfect technical bounce at the 50%. Absolutely. And look left again, previous structure. When we talk about all the blocks, when we talk about supply and demand zones, I mean, everything just marries up really, really well. And so again, the charts that I'm sharing with you and the instruments in particular, I like them all because they all just respect support and resistance in every form pretty much. You can see I'll show you the EMAs, I'll show you supply and demand zones, I show you, so with the previous structures, I show you things like the fibs obviously, and everything just gets respected and acknowledged. And so in terms of wanting confluences and in terms of wanting a reason, or as many reasons as possible, to get into a position, these charts and these instruments, they just move so well, and they give you every reason that you're looking for to justify getting in and out of a position. And so there really isn't any excuse for anyone to have to kind of overtrade or try and be hasty and rush in. And the amount of traders I've seen rushing into these trades before the price has finished moving to the downside, so they want to go long and it's still moving down, or they want to go short and it's still moving up, and it's just crazy, absolutely crazy. So I've taken this range on a 4 hour, I've highlighted it, and I'm just showing you in a little bit more detail this is the current bit of price action that we're seeing here. You know, it broke out of this. This has come back down to test this area. A bit of a supply and demand zone. So we're looking at maybe some demand to start buying from here around 1810, 1800. Again, you know, we'll see what happens. It's just showing you that picture. Last week was just a non-event. It kept looking like it was going to go up, and it faked everyone out to the upside. So I said after about 2 days of this, I said straight away, 1863. I'm interested in going long on gold if we break 1863 up to 1900 and above. To the downside, I'm still interested in potentially seeing a bearish move much lower and retest 1810, first stop 1800, and then maybe 1760s and maybe in 1720s on the higher time frame if it turns into a bit of a bigger swing move. And then let's drill down just a little bit further one more time. Hour chart. See, again, you don't need smaller time frames. You don't need a 15-minute chart, 30-minute chart, 5-minute chart, none of that. Hour should be maximum. You know, weekly charts down to your 1 hour, top-down analysis. It's enough to give you a good picture and a good enough idea as to what is going on and what could happen. And so understanding what could happen, when it starts to happen, that's your cue to get in and make money. Simple as that. And people wonder how I get sniper entries and things like that. It's because I'm doing my analysis like this and I can see what's going on. And I say, right, well, I'm hypothesizing. So coming up with an idea and saying, well, if it does X, Y, Z, then I'm going to do ABC. Or if it does ABC, I'll do X, Y, Z. You know, and that's it. If it meets your criteria in your trade plan, you've got some idea what it was going to do and you're looking for targets. So downside 1810. Down 1810 and then 1760s and then 1720s. I hope that has been helpful for you guys in terms of how I trade, how I analyze the charts, what I look for, and I bid you a good evening.